Well, year after year of economic uncertainty is cutting into Americans' ability to save. A new study released this morning shows only 48% of U.S. adults say they have enough emergency savings to cover at least 3 months worth of expenses. And for New Yorkers living in one of the most expensive cities in the world, uncertainty does not help. Joining us now to get into these numbers is Bankrate senior economic analyst Mark Hamrick. Mark, good to see you.
Good to see you, Chris.
Okay, we're just a real quick question for you before we just jump into this. We talk about economic uncertainty and people not having enough savings for 3 months. This seems like the savings for 3 to 6 months. We've been hearing this for years. And then, we talk about this economic uncertainty. We talk inflation numbers are both coming down. Gas prices are coming down. Stock market, we're looking at record highs day to day. Where is that uncertainty?
Well, we live in a world of uncertainty. I don't have to tell you that in the business that you're in, Chris. Every day we come in and we're sort of rocked by some development that can have economic implications. And so we've been through a lot in the last 4 years, one of the most serious economic downturns we've had in history, with a 14.7% national unemployment rate during the coronavirus lockdown. And that came about 15 years after another very severe economic crisis. And we are just a country that lives paycheck to paycheck. Our new Bankrate survey out today finds that only 44% of Americans can pay an emergency expense of $1,000 or more from savings. And yet this is at a time when the national unemployment rate is 3.7%, just a few ticks above that historic low of 3.4 in April of last year.
Why do you think people don't get the message that you do need to save? You do need to have that money tucked away for emergency expenses. I mean, we all, I guess we're all guilty at times of running up credit card debt or making that frivolous purchase. But I mean, essentially, you do have to budget. You have to know that you need a certain amount of money for rent and utilities and food and things like that.
I think we just don't prioritize savings the way we should, Chris. And listen, we live in a society that prioritizes spending, not saving, not sort of living to spend another day. We tend to want to live on the envelope, on the cutting edge, not beneath our means. And we're implored every day to spend more money on a vacation. Social media doesn't help, sort of making it look like everybody's going to the south of Italy these days, where, most of us are actually working. So that's one of the messages that we have at Bankrate is you can do this, and today's a good day to start. Have a direct deposit, dedicated savings account where you just begin to have that automatic payment come out of your paycheck, and slowly but surely you can build it up. Begin with, let's say, a target of $1,000, and then if you can get to 3 to 6 months of expenses, that's great.
This number is staggering. More than 1 in 3 Americans have more credit card debt than they actually have in emergency savings. This is the highest on record since 2011. We're talking about 13 years here. What does this statistic say to you when you see a number like this?
It says, first of all, there was damage from the worst inflation we had in a generation. And credit card interest rates, Chris, are the highest we've ever seen. The new offers for the best qualified individuals, those people that have the highest credit scores, are getting offers that are nearly 21% annual rate of interest. So for the roughly 1/5 of people who tell us they would put this emergency expense on a credit card, well, that's only going to do further damage to their current personal financial situation, which is why we need to have that emergency savings and sort of have our own insurance account for ourselves.
All right. So Mark, let me ask you this before I let you go here. You're an expert. People are watching at home right now wondering, okay, I'm watching the New Hampshire primary last night. I'm seeing exit polling. So many people are concerned about the economy. But then you look, as I mentioned before, the stock market, record highs right now. Mortgage rates are still high, but inflation numbers are down. Unemployment is down. So the disconnect that exists right there. What do you tell people about where the economy is right now and where it's headed?
Right now, wages are outpacing inflation. So that's the good news. The problem is that as we had inflation flare, what used to cost $100 cost $120. And so that was real damage done to purchasing power. But we're in a better place now. The outlook is very good for inflation continuing to come down. And if we're lucky, we'll have the Federal Reserve cutting interest rates this year. That'll bring down the cost of borrowing and should provide some additional foundation beneath the U.S. economy for the coming months.
You talk about that volatility. Every time Mr. Powell speaks, there's that like, oh, what's he going to say? What's he going to say? All right, Mark, thank you so much. We greatly appreciate your knowledge here, and it's good to talk with you again.